The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Monday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. We got about 24 minutes to go until the start of trading, and your market's picking things up in the negative. We're negative by about 0.4% in the S&Ps, off 21 points, trading at 58.94. You see the acceleration overnight at about 3 a.m. Eastern Time. You had Europe opening 58.70. We're trading right now at 58.94. NASDAQ 100 down by about 0.5%. Right in the middle of Friday's escalation, right? You drive lower Friday, you get it back by the end of the day. Right now, we're negative by about 0.5%, off 108 points, 21,268. The Dow off about 0.3%, 120 points in the red, 42,174. And the Russell basically flat this morning at 2,067. Bitcoin, we'll get there. There we go. Down about $500. We're testing the lows of Friday right now. 104,620 for Bitcoin. Crude catching a bid this morning. Check it out, right? From $59 and change on Friday. Crude nearing $64, up $2.84 for that crude contract. Now, what do you have happening? Boy, we got some dollar weakness, and that's driving some of the action. Gold up dramatically as well. Let's jump over to yields first. No huge reaction right now in terms of the move in the dollar. No real reaction in the yields. You're sitting with the 10-year. I was going to say about 4.43. Let's pull it up exactly right now. We're talking about a 10-year yield, 4.44. All right, all fours across the board, 4.44. But check out the DXY, man. We got dollar weakness. 98,679. Let's pull up the daily right now. And you're talking about a low out there from April of about 98. You did get a 97 handle, but that's where this market looks like we're heading right now. You got extreme dollar weakness. That's putting a bid in that gold contract. You got gold right now up $63. As it says, gold trading higher on dollar weakness, pushing the highs of May, which were 34.48 in the futures, and then you had that April spike up to 35.09. We're nearing the upper boundary of that area right now, and we're doing it up almost 2%, up $63 for gold. Silver up about 93 pennies. You see silver rising above anything we've had going on recently. You got the two highs out here for silver at about 35.49, and the high last October still sitting there at 35.07. Kind of a double top area. Silver coming in at $34. We'll jump over to copper, getting a bit. Anytime you're going to get this level of dollar weakness, commodities priced in dollars are going to go up. Check it out, copper, right? Up 22 pennies, up 4.6%. And in the same way, you got crude out there as well, catching a bid, up by 4.7% or $2.87. All right, so we're talking some yields. Here's your 10-year, 4.44. We'll update that one. 4.44, the yield on the 10-year. That's the 10-year. Jump over to the 30-year. Yet again, right? 30 years down 14 ticks. Jump over the 10-year. We're down 5 ticks. We got some movement, but the 30-year, yet again, I'm going to pull it up right now. In terms of where we are on the yield curve, it just keeps steepening. It just keeps steepening, man. Look at it. The further you go up the curve, the steeper it goes. You got the 30-year up 4 basis points. The 10-year is only up 2 basis points. And you go to the shorter, and we're basically flat. All right, that's a perfect segue to a couple articles I got ready. And what's interesting is this one out at 6 a.m. And this one, both talking treasuries, out at 6:30, okay? And the first one they're talking about is you got big players in this market right now saying, nah, we're not going to get into 30 years right now. There's too much risk when the steepening's taking place, okay? And you talk about some money managers, man. And you're talking about double line capital, Gunlick, okay, now you always got to be aware they could be talking their own book. They're not going to give away everything. Why would they ever? So that comes with any type of market commentary. But when you look at this yield curve, okay, the 30-year bond has been a stark underperformer. Yeah, I'd say so. But check this out. Yields on the maturity have risen, while those on the 2, 5, and 10-year notes have fallen. So again, the 2, 5, and 10-year, the yields have all come down. The 30-year went up. The last time that happened was a quarter century ago, 2021. Since that long, we've had that type of pressure on long bonds as investors demand added compensation to lend to the government for that period of time. And check it out, right? Year to date, we're almost 6 months through the year. The 2 years down 34 basis points, the 5-year down 42, the 10 years down 17, and the 30 years up 15 basis points. It's a huge move. And even on a day like today, it keeps going. Now, what they're talking about is treasuries. The Treasury has long sought stability in its debt sales, but one of the things they're talking about is potentially pairing some of the 30-year auctions. You saw Japan do it. Okay, they had the 40-year auction, the weakest one out there. And yes, this is the next test. 10 days from right now, okay, you got an auction of 30-year treasuries. You want to get ready for some bond volatility next Thursday. Look for it on your calendar, June 12th. And I say that because the Japan volatility all started when you had an offering of their 40-year Japanese debt drew the weakest demand since July. And that's when kind of the yen dollar went a little crazy. And Japan is thinking about scaling back the amount of debt they're pushing out on a longer-term basis. And you may see that happen as well here. Yeah, it's, debt in focus, the budget deficit in focus, of course. And it is remarkable when you think from a 10-year to a 30-year, okay, we're at the historical average right now, which is you're getting 50 basis points extra reward for a fatter premium to go out to a 30-year. But guess what? Money managers are looking for a fatter yield than that. Yeah, the spread over a 10-year, for example, it's just the long-term average. That's all it is. We wouldn't just look at the 30-year bond and say 5%, let's buy it. We would look at it and say it's actually still pretty rich versus the rest of the curve. As in, there's some room here for premium. Boy, you talk about it, though. Now, you go to this one, okay? And so we were just talking about this first one has the 10 and the 30-year gap, right? This one has the 5 in the 30-year. Now, what's interesting is you're at a spread that we haven't seen since 2021. Okay, now this chart went back to 1990. Okay, so yeah, in the same area, we blow this up. The 10 and the 30-year are approaching levels we haven't seen since 2021 as well. But how about the 5 and the 30? Okay. Yeah. We'll finish this conversation up. Yields in focus, dollar in focus as well. We got dollar weakness. You got long-term yields rising. We got equities slightly in the red to kick things off. S&P's off by 20. Stay tuned, folks. Be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years, with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. S&P's off by 22. We get the NASDAQ 100 off by 110. We jump around to that dollar-yen. So, yeah, you had quite the reversal here. You're talking about from Tuesday, 142 to 146, and boom, just like that, we're back to 142. And what's remarkable is this was the beginning of the long-dated 40-year, right? Yeah, there's the real escalation. The fear started beginning towards the end of May. You ratchet up to 146, and then they start pairing the expectation for how many bonds they're going to be pushing out on a longer-term basis. But the reason why I bring that up is we might be preparing for some of that as we're pushing dollar weakness right now. And boy, you talk about it, man. Dollar weakness coming in. As I mentioned, 10 days from right now, we got a 30-year auction, so keep your eye on that for yields. We jump back to the markets. S&Ps right now. We take a little look at the price and the volume action. Quite a day on Friday. Now, we rejected lower price, and we did it with some volume, but you couldn't get above the prior day. S&Ps, you did about 1.55 million contracts. That's a decent number. That's the most volume we've done. Yeah, there's only been one higher volume day in May, right? So we close out the session, strong day. You claw back from the lows. But we're kicking things off in negative territory this morning. And boy, this area sitting out here at about 6,000 is a heavy area of resistance right now. We bumped up against that area for the first time May 16th, a few days. We did it again on May 29th. And we'll see what today holds as we kick off June trading. NASDAQ 100 right at the same area. Right, you back it up to where we were towards the end of February when that selling started, about 22,300 or so. You zoom in on Friday's action, and you actually had less volume, which was interesting in the NASDAQ. You check out the S&P, right? higher volume, 1.55 versus 1.37. So you're talking about 10% more volume, more than that almost. And the S&P, the NASDAQ couldn't get it done. So we got a few bars right now, and then we jump over to the VIX. When you're talking volatility index, we get a VIX under 20. We put it on a 15-minute. We're trading at 1949. That's where we've been chopping around since about Tuesday of last week on the VIX. And so, yeah, we've talked about treasuries. We got the 10-year at 4.44. And boy, when you're talking about a trend here, okay, that is longer duration steepening. And it seems like that's the trend right now. And you take a look at these articles, right? And one great point that I saw in here, let me see if I can find it. It said, who's going to step in right now, right? You let that area stabilize a bit. You get the right one. All right, either way. That's a falling knife to step in front of right now on a longer term basis, and it seems like many investors, waiting that one out for some calmness. Now, talking about the VIX. VIX closed at 1857. You got a lifetime average around 1950, which is where we're basically sitting at right now. And it's one of those risks you got to anticipate. And it doesn't mean the risk plays out, but it is an active risk. And the basic premise here is, hey, volatility is back to remarkable lows. Okay, there's a lot of people selling volatility still at these prices. And it's something you want to consider. Because the uncertainty is going to persist, folks. And that's a tough one as we come into earnings. Yeah, we'll talk a little credit. And talking about the tax bill. Ron Johnson, he's going to get a lot of press, rightfully so. GOP senator not happy with the bill. And he's been pretty vocal about it. Legislation reducing taxes and cutting Medicaid does too little to rein in deficit spending. I would agree with Mr. Johnson. Oh boy, look at this quote. He's not happy, folks, with the bill. I'm saying things that people know need to be said. The kid who just exposed that the king is butt naked may not be real popular, but he kind of made everybody else look like fools, but they all recognized he was right. Like to think at least that my colleagues respect my passion, my genuine desire to do the right thing and to fix these problems. Well, he's probably going to get the wrath of the president coming up at some point. But nonetheless, a glimpse of what's going to persist as that battle rages on. Yeah, steel stocks, how about it, man? 50%, right? 50% tariff from 25%, and that's ratcheting it up. Cleveland Cliffs up almost 25%. You talk about a move, man. A 25% increase. And again, just kind of underscoring the potential volatility and uncertainty that comes down the line right now in this environment. All right, let's jump around to some of the Magnificent Seven as we kick things off on the trading month, the trading week of June. The trading month of June. You got Apple slightly in the red, about $199. You jump over to Amazon shares this morning, down about $1 to $204. Microsoft trading down a few dollars, $4.57. Nvidia coming off their strong numbers last week. Quite a trade for Nvidia last week, right? You open at 142 almost after their earnings. And Friday, you didn't claw back those losses like the rest of the market. Nvidia was down almost 3% still by Friday's close. And you're almost flat at 135 so far this morning. We jump below retail. Walmart shares trading at $98 right now. And Target slightly in the red. So we got non-farm payrolls on Friday for the month of May. And yeah, the data is going to keep coming, man. Check out the Dow right now. Dow off about 133 points. Elon. Boy, that press conference was something else, man. Pardon me, I don't even understand what's going on. And help me out in the den a little bit if you can. I mean, I know that he plays for the crowds. the whole Hitler salute that he does purposeful is pretty remarkable when you have, the richest man in the world purposely doing a Hitler salute, knowing that he's going to get all the headlines, okay? Not by accident. The things he's doing are very purposeful. And he looked like he was on so many drugs in that press conference Friday that I wonder if he was doing it purposely to detract from everything else. But either way, if that's the case, there's two cases. The guy either looks drugged out of his mind. If you haven't watched the clips, folks, you got to watch it. The way his head is just rolling around. He's either drugged out of his mind or he's purposefully trying to make everybody talk about the fact that he's drugged out of his mind. Both of those are pretty remarkable situations when you put it in that context, not even talking about the Times article on Friday. If you haven't watched the clip of him in that Oval Office, folks, you got to watch it. He's got a black eye, whatever, but just the facial actions. Tesla down by about $4, down about 1% with the market right now. S&P's off about 0.3%. We're coming back for the opening bell. Don't go away, folks.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs? Trade wars? Analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets open. Markets catch a little bit of a bid on that opening bell. You see a little bit of an uptick coming into the opening bell. We have the NASDAQ 100 down by just 0.2% right now. S&P's off by 0.2% as well. And yeah, coming into basically Friday's close, just in the red. Russell in the positive by 4 points this morning. Some big action in the dollar today. Dollar weakness as we're coming into 98. Ooh, there's a little bit of a lift for you, though. Okay, 98.912 right now on the dollar. And we check back in on yields in focus. And you got the 10-year right now trading negative by 3 ticks, just chopping around. No real huge action when you look at it compared to what we have right now going on in the dollar. Now, with that in focus, yeah, headline right there. Wall Street sees deeper dollar rout as currency nears 2023 lows. Now, this one was out yesterday, updated this morning, though. Okay, but yeah, Wall Street banks reinforcing their calls that the dollar is going to weaken further. Morgan Stanley said it's going to tumble to levels last seen during the COVID pandemic by the middle of next year is what they're talking about. Dollar short positions stay close to the highest since 2023, and that's what I wanted to get to. How about it, right? The yellows in asset managers, it's a big number, man. And then you got leveraged funds in the pink up there. So asset managers just loading up on shorts on the dollar to the tune of tens of billions of dollars. And where do you think yields are going, right? Morgan Stanley's looking for the 10-year to reach about 4% by the end of this year. That'd be a drop of almost half a percentage point. That'd be nice for some mortgages. Always interesting to see how that market goes, right? Having some conversations this weekend with one of my good friends, and we were talking about, mortgages in general, right? We came in, whether it was 2019, I refinanced the property 2019, 3.75% I got. Boy, if I had held out 5-6 months later, right? You had mortgages with a 2-handle, 2.9, wild stuff across the board. But that's probably never coming again. A 2-handle on a mortgage, if it's coming, boy, the economy is going to be in a lot of trouble. I'm not sure you want it to be coming, right? Because even if you have equity, you have cash, you're liquid, you have some cash to take advantage of it, wherever you're invested, if we're getting 0%, there's going to be destruction in equities, in asset valuations. But let's just say there's never a 2-handle mortgage coming again. Let's say there's never a 3-handle mortgage coming again. And never say never, okay? But let's just say that situation. We don't need a 3-handle mortgage. We get into a 5-handle mortgage. Watch out in that real estate market, let alone if you ever get into a 4-handle mortgage and the economy's behaving well. Well, guess what? They're talking about a 10-year at 4. That would bring your mortgage rate down to about a 6. If you got about a 2% gap, that's about a 5 handle. So we'll see. The real estate market, always focused on real estate, to say the least right now. Look at this market. We get it back, man. Stocks charging higher. All right. Let's see what's leading the way. There's a bid for Apple shares, up by 0.5% right now. They're buying again this morning. Look at this. Across the board. Amazon in the green by 0.5%. Microsoft flat, but they catch a bid on the open. You got Tesla shares right now. Everyone's doing it. They catch a bid, up by 0.2%. NVIDIA up by 1.3%. All right, we got action across the board right now. AMD up by 1.8%. Jump around to some other equities. There you go. Even UNH participating, up by 1.8%. Some of the other movers. How about the action on Palantir on Friday? Already we got some action. Palantir up about 1%, 132.94 right now. All right, jump to some other movers out there. Yeah, and how about it, those steel stocks, right? Cleveland Cliffs. You got to love it, man. Double the tariffs. And so, yeah, if you're making steel and you're dealing with competition that's got a bigger tariff, you got to love it. Up by 22% for Cleveland Cliffs. And this one's a good one. Let's talk about this one. Where's my article? Here we go. So, Bristol Myers Squibb. They're going to pay BioNTech $11.1 billion, which is going to come in the form of $1.5 billion upfront and $2 billion in installments through 2028. Okay? And And they also have as much as $7.6 billion in milestone payments. And the partners are going to split development and manufacturing costs and profits equally. So think about that. Wait till you see. So again, Bristol Myers is going to play BioNTech. $11.1 billion to license it, $7.6 billion in milestone payments, and then they're going to split the profits equally on top of it. Okay? BioNTech licensed BNT327, which is that compound, okay, from Chinese biotech in 2023 and bought the company for less than $1 billion. What a deal, man. What a deal when you put it in that context, right? And BNTX up by 15% on that number this morning. Bristol Myers Squibb, BMY is their symbol, up by 0.5%. We take a longer term look at these on a 5-year weekly. Yeah, look at this thing, man. These drug companies trying to procure, and what they also talk about, they had to. You have to keep up with the competition. Why? Pfizer just agreed to pay as much as $6.1 billion for a record for a Chinese biotech to license a similar cancer asset. Next generation cancer drug. Competition intensifies in an area of oncology that seeks to harness the immune system to attack tumors. That's the next deal, man. It is. You know, my dad was trying to get into some trials as things were progressing, and, you know, it was all about basically the immune system and some of the trials that are in there. mRNA, etc. But yeah, how about it, right? So Bristol Myers Squibb, yeah, they're trying to make sure they exist in the future. Look at this thing. We had lows last year, $39. We're at $48 right now, off of the high at $62. Look at this chart, man. Some of these companies living and dying. Look at this. Look at that, man. Look at these two equities. Bristol Myers Squibb and Pfizer. You could have bought them both, and you'd still be losing money. What, 20 years later? Yeah. Oh, my goodness. 25 years later. The two of them. Be careful of these equities, folks. Any equity that you could have bought 25 years ago and you're still losing money, and here they are 25 years later, and the two of them are just trying to pay billions of dollars to make sure they exist in the future. That's not a recipe for multiple growth and expression. Those are some remarkable charts when you put it in that context. All right, back to a short-term time frame. We got markets catching up right now. You got the S&Ps flat. NASDAQ 100 up by 67 points. We got tech stocks catching a bid. First day of June trading. Stay tuned, folks. I'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direction.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey. Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got a little volatility to kick off June trading right now, as we have the NASDAQ 100 positive by 30 points, and you get the S&Ps negative by 6, but a little bit of a roller coaster to kick things off. We jump over to the VIX this morning. There we go, catching up. 1905 right now for that volatility index. Look at NVIDIA, man, up by 1.2%. These chip stocks. Whew, AMD up by 2% right now. Oracle down by 0.5%. You jump over to Dell. Tough numbers from Dell last on Friday. You're down by 3.5%. Yeah, watch out for that one, man. That was quite a spike, and you gave it all up on Friday. It's not what you want to see. Whew, look at this chart, man. Pulling up the volume numbers. This is a weekly we're looking at right now, going back about 5 years. That was some big volume last week. I mean, earnings did it, okay? Earnings will always have some big numbers that come in on the volume. You see it happening, right? We'll go through. Dell down by 3.1%. And yeah, back to that article. So Bristol Myers paying billions of dollars. And what it talks about is new category of cancer treatments exploded last year when a Chinese biotech company and its U.S. partner Summit Therapeutics announced that their experimental drug had beaten Merck's Keytruda. I can't believe I can't pronounce that perfectly with how many ads I've seen for that drug alone on television, the world's best-selling drug in a Chinese clinical trial. And yeah, what they do is that compound and others like it combine existing immune oncology technology with a second type of medicine that cuts off the blood and oxygen supply to tumors. The idea is to make immune treatments that will be effective for more patients. Now, what they also talk about is that the Pfizer asset may be the most effective, though the BioNTech one is ahead in the effort to expand the use of such treatments to more types of cancers. So they have the one that they can actually expand to greater use. Meanwhile, the Pfizer asset may be the most effective. We'll see how that plays out. But as I mentioned, boy, those charts, man. Those are some tough-looking longer-term charts. You pull up those charts on a longer-term basis, and you say, is this the buy? I'd say not even technically. Maybe you make the case that that spike lower in May was your lows from 2019, which ironically is your lows from 2000 and your lows from 1998. Whoo-wee. Man. But boy, you break below this level, I'd keep your eye on Bristol Myers Squibb, man. They're paying billions of dollars. They're still going to share the profits with the company. Think about it. Where were they? I mean, think about this. Where were they in 2023, right? BioNTech's buying those, and I know this is how it goes, right? You get the biotechs that are basically development arm of the big drug companies out there, but my goodness, man. You know, they scooped up that for less than $1 billion, and now Bristol Myers is going to pay $11 billion plus $7 billion in milestone payments potentially, plus half of the cost to produce it, and then getting only half of the profits after all those costs. And Pfizer shares, man, Pfizer's like even worse, right? You look at this chart, you're basically in a losing position no matter where you bought this equity outside of the period from 2007 to 2012. And you can't tell me that looks like a buy on a technical basis, man. I mean, maybe you can say on this equity, on Pfizer, that you traded lower and finally the volume started lightening up in the month of May. Let's put it back on a weekly. Tremendous amount of volume, December of 2023. You do it again last November. Around the election, you start escalating lower. All right, we got lows out here in April. That's a tariff low of $21. But boy, you haven't seen a lot of strength. We have declining volume the whole month of May. Okay. Yeah. It's going to take a lot for Pfizer to get over this 24.44 high. You had to close there about 24.20. So keep your eye on that one if you're looking to get in that equity. Microsoft holding on to the gains, positive right now. Amazon was up 0.5%. Market's giving it back a bit. You get the NASDAQ 100, barely positive. S&P's now negative by 12. We got a little bit of a rollover here. Not for Boeing, though. Look at Boeing, up by 1.2%. What a run since those April lows. Let's back this up even further. Yeah, Boeing might be making a run to the highs of 2023. That's also the highs you had out there in 2021. You're talking about a price area about 264. Now, again, we're going to have to see some volume here. That was a short trading week last week. We did 35 million shares. The week of May 12th, you did 58 million shares. So if you're looking at Boeing, this has been a heck of a run. We've barely had a pullback. You just traded from 130 to 210. What is that up? 80 and 65 would be 50%. Yeah, you're up 60%. Yeah, not bad volume on a shortened week, though. When you look at the week of May 19th, was only doing 27. So Boeing's still looking good. You're up by 1.1% today for Boeing shares. Walmart. Can't hold Walmart down, man. Up 0.6% for Walmart shares. We jump around to some of the other ones that are always doing well, it seems. TJX, quite an uptrend channel. We talk about it. Slightly in the red by 0.2% right now. You jump over to Mickey D's. Flat on the session. Netflix has been on fire, man. Yep, today. Up again. Look at this equity. Now, I mean, Boeing's had a heck of a run. Netflix has had a heck of a run, too. Netflix is up 50% since those April lows as well. There's a lot of optimism built into this market right now, folks. When you got equities that are strong like bull, like Netflix, and you're up 50% in a period of 60 days. 50%. Whoo-wee. NVIDIA's even a bigger number. We're up $50. Folks, you're up $50 for an equity that has 25 billion shares outstanding. That's $1.25 trillion, and that's a good 60% return as well from those lows. And the point being, risk reward here with a VIX sitting relatively low at 19. You're seeing it happen. Keep your spikes up in this market right now. We had a lot of volatility. All right? Just even pay attention to the move we just got. Right? You're talking about 200 points up and 100 points down in the first 20 minutes of trading.
While this works for some,
we'll be right back,
it
folks.
oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. And yeah, that was quite an acceleration. Whew, and we give it all back just like that with the NASDAQ 100 now negative by 55 points. That's about 0.25%. You got the S&Ps off about 0.4%. Dow. Yeah, it's similar about 0.6. We got a little bit of a rollover. Look at the Dow. We just lost 200 points in a heartbeat, man. All right. Now, dollar, gold, silver. You talk about some moves, right? Dollar down 50 pennies, 98.82. You take a look at the daily. We have lows out here of April 21st, okay, of a 97.921. What I want you to look at for a second is where the dollar was on May 6th and May 7th, okay? Those 2 days you were trading between about 99.30, we'll call it, and 100. 99.30 and 100 on those 2 days. So the dollar's below where we were there, okay? We're getting quite a bit today. Gold's up $85. I'm going to jump to silver next. Silver's up even more. Silver's up like 3.5 to 4%. I know we're talking silver today in the den. Everything's exploding higher when the story is that the dollar's crashing. Folks, that's my take on it. All right. Crude's up just as much as silver is today. Crude is up just as much as silver is today. 62.85, up almost 4%. You jump over to silver, up 3.98, $1.36. Yeah, you are breaking higher. Okay. Remember how quickly silver can fade. And listen, the ratio's there. It is. But this is about the dollar, I think, man. And you look at this dollar, longer term basis, I think we're coming back to 90, folks. Looks like this is going to break. Now, we haven't broken yet, but keep those spikes up. Looks like we're doing it. The last part is, though, that doesn't mean that you're going to get 4,500 in gold or something like that. Yeah, you might break the highs at 3,500 here, but boy, it's been quite a run. And gold right now digesting some of that nonetheless. Markets in the red, gold in the green, dollar with a 98 handle. Folks, thanks so much. Stay tuned. We got Basil Chapman coming up next. We got our man Steve Rhodes at 11, Fast Market at 12, Larry Pesavento at 1 o'clock, and I'm coming back for the 3 o'clock show this afternoon, folks. I'll see you then. Have a great day.